Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking FX. Let's talk about the Japanese yen. Bearish start to the week. It's very early, obviously, being a Monday, but after a strong finish to last week, the yen moved lower today, 14 basis points lower, just over 0.1%. Not much of a move, but it's a very interesting currency when you look at the week ahead. And considering that of the prior 4 weeks, we had 2 up weeks off of the lows and then 2 down weeks. And then last week, while it was a negative week from open to close, we got a very strong rally late in that week where we had the last 3 days up, almost returning all the way back to unchanged and then failing up against some resistance I talked about. 9002 the settlement, so the 9,000 level kind of holding in the yen futures contract. It's a very data focused week on the Japanese side of things, so yen watchers will have plenty of that economic data to look at and to focus on. We've got real cash and real labor earnings, which could show some wage pressures in the Japanese economy. Those are year-over-year figures expected at 1.7 and 0.09 labor and real respectively. So again, you could see a little bit of inflation pressures there. We've also got the GDP later in the week, and we've got the coincidence index, both of which will be closely watched for the Japanese economy. Looking to potentially see some strength out of it after we saw that the Bank of Japan, the BOJ, is allowing the JGB yields to float a little bit more than they have before without entering in. They will still buy Japanese 10-year sector, which is the JGB, if something happens with the yield where it gets out of whack, but they're going to let a sort of 20 basis point band run now instead of the 10 basis point band. So they are looking for some more volatility in those JGBs, and they're going to allow a little bit more to happen. And then lastly, the dollar is stronger as well. The dollar is testing the 95 level on the dollar index, so it may be breaking out against the majors. And if it did that, it would certainly contribute to the Japanese yen weakness, that being the second largest factor in the dollar index contract is that dollar versus Japanese yen. And again, seeing the yen a little bit weaker, it could be the factor that helps the dollar index break out, which would kind of show some selling of all the majors, and that would kind of pile on the yen as well. This is Bob Iaccino talking about a weaker Japanese yen futures contract from the CME Group trading floor in Chicago.